This report brought to you by the Richmond Club, where investors and high-growth companies meet.
Okay, good afternoon, gentlemen. My name is Galit Salman, and I will be introducing our presenters today. Our lunch will be served very shortly, but our first speaker is Michael Hepworth. He is the President and CEO of Nordic Gold.
Well, good afternoon, everybody. Thank you for coming. I appreciate the opportunity to present to you. And the headline here really tells the story. We are Europe's newest gold producer. We actually poured gold for the first time on Friday. We poured 34 kilos of gold, which was of doré, which was 90% gold. This is a past producing mine, which is we acquired in February of this year, and in the last 11 months we've spent our time putting this together and making the mine work. Of course, the forward-looking statements are always important. So let me just tell you a little bit about it. I think probably the best thing is to use this pointer. We have two pits. There's a north pit and a south pit. South pit's about 10 meters deep. The north pit is about 35 meters deep. We have a fully built plant. This is where the crusher is here. This is where the crushed ore storage is. The mills are in here, and this is the processing, separation, and the cyanide tanks are here. And then our high-grade tailings ponds are here. We have about 1,700 hectares. We're going to be producing about 70,000 ounces a year, and we have a very, very robust PEA on this. Shows a 44.7% IRR, and all-in sustaining costs at $951 at $1,300 gold. So we should be able to make money. There are some other parts to this story which I'm going to move on to. Pushing the wrong button here. We're located in Finland on the west coast, about halfway up the country. So down here would be Helsinki, up here is where the mine is, and then Kittilä, which is the Agnico Eagle mine, is about 500 kilometers further north where we are. As you probably know, Finland was rated the #1 mining jurisdiction in the world last year, and we've had incredible help from the Finnish government. They have gone out of their way to help us get this thing permitted and back into production. And the other good thing about Finland is the corporate tax is pretty low. Having said that, we probably won't be paying any tax because we have $155 million tax loss carry forward, and our cash flow from this project will be about $138 million. So we don't look like we'll be paying taxes for the next 10 years or so. The people who built this mine spent 220 million euros on it, and we were able to pick it up for $25 million at the beginning of this year. The mine was on care and maintenance and was in the Finnish equivalent of Chapter 11. They'd run out of money and they were desperately short of cash. We put $1 million in and secured exclusivity, and then negotiated the rest of the deal that way. There's a 43-101 resource on it. The measured and indicated is 151,000, and the inferred is 445,000, giving us a 6-year mine life. But the real upside here is the exploration story. There's a huge opportunity to grow this resource. When we acquired this company, there was a JORC 1.1 million ounce report. We obviously weren't allowed to use that, and so we had to do a 43-101, and the finance team that was working with us sort of ground us down on the resource so that they could make sure that they wanted a conservative estimate. So we believe with a bit of infill drilling, it'll be fairly easy to get that back up to the level that it was before. So we've gone from, as I say, obscurity to a 70,000 ounce gold producer in under 11 months. We completed the PEA in June of 2018. We started mining in August 2018. We had an analyst tour come around the mine in August. We did our first pour, as I said, last Friday, and commercial production will probably start around February next year. And the next thing that we plan to do is to buy back the gold forward sale because this is very expensive money, and we think we can do better in the open market. There are some of the details from the PEA. As I said, 44.6% IRR, 1.7-year payback. The tax loss comes in there, the cash flow, 138 million over the life of mine, and the mill grade will be about 1.45 with recoveries around 90%. I won't go into all the details, but if anybody has questions, I'm more than happy to answer them. I think one of the most important things here is, and unfortunately you probably can't read that, is the management team that we have. We have an exceptional senior team at the mine, 3 mining engineers with at least between them 75 years of gold mining experience. Joe Ranford, who's an Australian, has been responsible for getting this mine back into production. He was with Normandy Gold, Crocodile Gold, I'm just trying to remember who else. Anyway, it doesn't matter for now, but a guy with a lot of experience. Vern Langdale is the mine manager. He's a Brit with about 25 years of gold mining experience. And then Scott Salisbury, who has a very good pedigree as well, BHP Billiton, Barrick, Normandy Mining, people like that. So we've got top-rated people operating the plant as well. So we have 3 goals. The first goal is to improve the mine efficiency and economics, and we've gone a long way to doing this already, but that will be a continuous process until we've got it to running like a Swiss watch to the level that we're looking for. The previous operators had a huge problem with dilution. They had very few mining people on their team. They were mainly geologists and didn't really understand how to mine it. So we've approached this from a very different angle. We've taken a scientific approach to mining and processing this. The second goal is to extend the mine life, and we have a number of properties that will enable us to do it. As you can see, at the top there is the mine itself, and there's a large opportunity just on the property that we own to actually find more gold. There are 2 properties to the south which are fully permitted for exploration. They have had some bedrock sampling done. There have been 4 holes put in there. Each one of them has hit gold. Very similar grades to what we have at the mine area. And then 12 kilometers to the south is Altava, which we're probably not going to do anything with in the short term, but does present an opportunity. We have about 5,000 hectares of exploration property that we can cover. Let me just talk a little bit about this. So the gray area on this diagram is the area that's fully permitted for mining, South Pit and North Pit, and the plant is right here. So there's about 1.5 kilometers from the pits to the mine, so transportation is kept low. You can see some of the grades if you look at those on your handout. We've got some very high grades, 44 grams over 2 meters, 7 grams over a meter, but most of it's around 1.5, 2 grams. So we're very optimistic that we can actually find more. The only thing that is actually constraining this is the drilling. The resource extends significantly further. One of the other things that we're doing right now is extending the existing pits. These red areas are actually where the high-grade gold is, the yellow is where the low-grade gold is. So we're pushing back the North Pit and the South Pit to give us some more area and create larger mining opportunities. The third opportunity or goal that we have is refinancing the gold forward sale. We borrowed 20.6 million in December of last year to buy this mine, and we have to pay back this with 70,000 ounces over the next 4.5 years. You'll see the repayment schedule there. Initially, there's nothing for the next 12 months, so anything that we make in the next 12 months will go to the bottom line because there's no tax and there's no repayment on this. So Pandion Mine Finance, who are the people that did this, have 19.9% of the company, and they also have a 2.5% NSR. We will be paying them back a cash advance that they gave us 7 million to get us to production, and we are currently raising money in order to do that, but we can also pay them out of cash flow, which is part of the plan. So that's the third objective. Sorry, there's a mistake there. There are 220 million common shares outstanding. Options are about 7.5 million, warrants about 21 million, and there's a small amount of debt with 4 million convertible debentures. The value of that debt's about 600,000 with a 9% coupon. They will be converted at 20 cents. So on a fully diluted basis, 228 million shares, and the market cap's 23 million at the current share price. I'm not going to say too much about the other juniors, but I think the important message here is that this is probably the cheapest gold in the ground that you can buy right now. The company is very undervalued in my opinion, and it's very undervalued in terms of what the analysts are saying. Fundamental research puts a value of 67 cents a share, and we're currently trading today at around 10 cents. I think there are a couple of issues with it. Obviously, year-end selling is an issue with tax loss. But I think one of the bigger problems is that we've come from nowhere in 11 months. And, normally to get to this point, it would take probably 10 years to get here. So the market hasn't really caught up with the story. And of course, gold, has not got the enthusiasm that it might have at some other time. So right now, we have, I'll just reiterate, market cap of about 23 million. Cash on hand is about 2.5 million. 220 million shares. Board and management own about 5% of the company. And I think the best way to summarize this is that production has already started. PEA indicates profitability at current prices. There was very little pre-production capex because it was about $8 million. And the three goals that we have are optimizing the process, extending the life of mine, and buying back the gold forward sale. And with that, I will hand you back. Thank you.
This report brought to you by the Richmond Club, where investors and high-growth companies meet.